आज की सीए एग्रीगेशन कमेटी की आज की जो वेबिनार है, स्केलिंग योर सीए फॉर्म वैल्यूएशन नेगोशिएशन स्ट्रेटेजिक नेटवर्किंग फॉर सस्टेनेबल ग्रोथ पे मैं आप सभी का बहुत स्वागत करता हूं इस कमेटी की तरफ से। मैडम दृष्टि, मैडम हर्ष बत्रा जी का स्पेशल इस एज जो जिन्होंने स्पीकर के रूप में ज्वाइन किया है, और हमारे जो चेयरमैन, इस कमेटी के जो चेयरमैन है सतीश गुप्ता जी, मैं उनका वेलकम नोट से पहले मैं उनका परिचय देना चाहूंगा। तो
और
सतीश,
धर्मेंद्र
हाँ,
भाई, let it be there, no issue. Thank you very much. And respected Drashti Desai ji, Honorable Speaker of today's webinar, Harsh Batra ji, another respectable speaker of today's webinar, my brother Dharmendra Shekhar from Jaipur, moderating the wonderful webinar, and Purnima from the committee and tech team, and my dear friends who in a very uh, moderate number attending this webinar. Welcome to each one of you. Let me say that this effort of aggregation for CA firms committee is bringing new hope in the profession, that now we how we can aggregate so the desired results in the profession can be good. So we are working a lot in the committee this year. We are making the outreach program to every branch, whoever desirous of having the aggregation program. We are having that seminars, conferences, and other programs also. We are coming up with several publications in the vernacular languages. We are coming up with amendments in our networking model and the corporate form of practice model. We are also coming up with one model where there is no requirement of registration with the institute, and simply there is a requirement of information to the institute, because the focus of the government of India is on the advisory and consultancy role. And we think that to make our members more visible, more united, more aggregate, we should try to all levels. So at this committee, we are making all our efforts. And today is very big day, because I know that Dasti Desai ji is having a very big name, and she is the speaker of repute. And after hearing her deliberations, all the members who are attending this webinar shall definitely be having a value addition to their knowledge about the aggregation, and how can they scale up their firm, how can they scale up their profession, how can they scale up themselves for the betterment of the profession and fraternity. So I don't want to take much of your time. So over to Dharmendra for the next proceedings. Thank you, Dharmendra, and thank you, team. Thanks a lot.
थैंक यू सर, थैंक यू सतीश जी, आपके बहुत बहुत धन्यवाद। और मैं अब दृष्टि मैडम का को इनवाइट करना चाहूंगा। उससे पहले मैं थोड़ा उनका परिचय देना चाहूंगा। दृष्टि, आज के इस कार्यक्रम में बीच उपस्थित सीए दृष्टि देसाई जी एक अनुभवी चार्टर्ड अकाउंटेंट है। उनके क्षेत्र में लगभग 30 साल का बहुत गहरा अनुभव है, और इंस्टीट्यूट ऑफ चार्टर्ड अकाउंटेंट की इंडिया में ऑल इंडिया रैंकिंग के साथ उन्होंने अपनी डिग्री प्राप्त करी थी। और आपका कार्यक्षेत्र स्पेशली कॉर्पोरेट एडवाइजरी, मर्जर एक्विजिशन, डायरेक्ट टैक्स, फैमिली सेटलमेंट एंड सक्सेशन प्लानिंग के एरिया में है। आपने देश की कई लिस्टेड कंपनियों के साथ बहुत वैल्यूएशन, ट्रांसफर प्राइसिंग और फेमा से जुड़े मामलों में आपने स्पेशली एडवाइजरी ज्वाइन करी है। इसके अतिरिक्त आप कई इंडिपेंडेंट डायरेक्टर के रूप में सेवाएं दे रहे हैं। आपके आईसीआईसीआई वेस्टर्न रीजन के वाइस चेयरमैन के रूप में भी महत्वपूर्ण योगदान दिया है। आप एक प्रेरणादायक वक्ता है। हमें पूर्ण विश्वास है कि आज आपके विचार हैं उन सभी के लिए अत्यंत उपयोगी सिद्ध होंगे। मैं ज्यादा टाइम ना लेते हुए मैं सीए सस्ती देसाई जी को माइक लेता हूँ कि आज का हमको जो जिनका जिनका आज का जो सब्जेक्ट है, वैल्यूएशन ऑफ योर सीए फर्म, एक की स्टेप स्ट्रेटेजिक ग्रोथ डिसीजन, जो कि आपका सेशन इसलिए सब्जेक्ट पे है। ओवर टू सस्ती देसाई।
Thank you, Dharmendra ji, for these kind words. What is happening here? Sorry. Sorry, my video went bad. Okay, so thank you very much for the kind words. And I would like to thank the chairman of the committee, Satishji, for inviting me for this session and for the kind words of introduction that he has also spoken about me. And so before we start off this topic, I think this is something which is at the heart of our Prime Minister's vision that we need to have Indian multinational firms, and somewhere that can be only rolled out if we have some sort of a collaborative approach, some sort of a consolidative approach towards our practice rather than have individualistic approach. And if we do that, then we can grow because as I always say that every person has only 24 hours. And out of 24 hours, you cannot work for more than 14 hours. So one cannot possibly deliver on everything that you come across. You need to have a team. You need to have subject experts, and to do that, the best way for Indian firms or the Indian chartered accountants is to go in a collaborative way. So my today's topic is, though it is talking about valuation of CAs and CA practices, I would also like to touch upon, how people go about collaborating for the purpose of forming larger firms, bigger presence, and greater expertise. So better delivery. Just let me just share my screen so I can take you through the presentation. Yeah. Mhm. Mm. Yeah. So, this is a very important step, as I said, in your growth strategy. Otherwise, you will never have the subject expertise. You may have a vision for business, but you cannot deliver on everything because that concept that one should really be able to deliver on everything single-handedly may not really be true in today's world when there is so much expertise, and that's where people show, their superiority by showing expertise. So it is very important that all CAs should somewhere go in this direction. I completely understand the limitations which are there for small practitioners. That is where the chartered account, the businesses they are catering to, they require them to render services in a very holistic manner, give them advisory for everything. But I think somewhere there should be some way in which you can step out of a mediocre way of practicing to a better way of practicing, giving better value addition also to your client. So let's look at all the things which are prerequisites for creating value for your CA practice. So the session is really about valuation of the firm, and so I have to, talk about this. So why value your firm? So supposing you have a practice which is old, you want to probably have more partners, younger partners to join your practice, or if you want to sell out your practice, in that case, you value your firm. If you want to bring in more younger partners and you will say that I have built this practice over such a long time, I really want to get something against getting new partners into my practice. That's also a way in which people do transact in this space. Every firm though goes in a very different way, and not everyone takes partners or younger partners or talents after taking, a price for the share in the goodwill. However, that is also not a really very wrong thing because ultimately a practice and the client base is built over a long period of time with a lot of effort. And so it's fair for, a senior partner to, look at some way of encashing the goodwill which is built. So now we are going to talk about, what are the value drivers, what are the valuation methods, and what are the practical scenarios, what are the typical errors in valuation. So let's look at everything one by one. So when we, why do we want to value our firm? The reason why we need to value the firm is, supposing you are looking at a really big strategic partnership, then also you may need to value the firm. Now, there are various ways in which people, collaborate or go in an inorganic manner. Everything is in a way based on the level of the practice and the cash flows which can be generated in the practice. So I would say valuing a CA firm or valuing your practice is not very different from how one would go about valuing any other business. That is, you have to see as to what is the cash flow of your firm, what are the likely cash flows. It may also happen that you may come together with certain, window for uh, leveling up and then do a full scale merger. So there are various, models which are possible, which ultimately have to be fair to both the parties coming together, because it's only when it is fair to the parties that a merger or any strategic partnership can last. So first thing is that it has to be fair. Now, as I said, the reason why somebody even does a valuation of the firm is, supposing you're giving a share of profit, or there's a there's a pool of young chartered accountants who have the talent. They have come with certain technical expertise. They have some certain technical expertise and training and a lot of exposure, but they don't have client base. And so such pool of young chartered accountants may also be looking at, some sort of a buyout of some firm. And that's where the firm valuation is very, very important. Sometimes it is also, as I've written over here, about succession planning. That is, when a partner steps down, the partner may say that I should get some, goodwill for the business that I have created or I have left behind for the younger partner. So, for that reason, also one needs to probably do some valuation of the CA firm. Uh, then of course you can even look at how you can project yourself before a financing company, so that, of course, that's a very far-fetched thought, but then against your future cash flows, how best you are able to service your loans. But for a CA firm, really, with a service orientation, you don't really need that kind of funds, because ultimately uh, the margin in service industry should be decent to sustain good level of capital injection also. And so one really need not get into any financing. I also know of the practice of CAs borrowing for lending to their clients, and those clients who are otherwise not able to borrow at any comparative rate. In fact, it's a very, very risky practice, because we don't we should not really get into NBFC business. Let that be done by the NBFCs. We should stay, according in my philosophy, I would say that as a CA, I would rather remain an advisor or a service provider than become a financier. You also need to value your firm for, merger, takeover, or basically, even if you want to give some sort of an outlook to the firm as a whole, the people working there, because today everybody looks at some sort of um, growth in the value. You also have sometimes emoluments which are given out in terms of a percentage in the value which is created. And in that case, you will need to do valuation of the firm. But of course, that kind of a thing will have to be in a very, very proper, formatted way. And the formula for the same should be properly laid down, because otherwise this can lead to, instead of giving any incentive to a person, it might fuel more litigation amongst the partners. So instead of consolidation, it might lead to just complete fall apart, and it might in fact lead to a disastrous scenario. So for all these things, you need to really value your CA practice. Now, now this is something that we must really focus on more, that what are the key value drivers when we look at any service firm, any service company, what are the key value drivers? So so the first thing is that when do you believe that the firm has, or the CA has been rendering good service and has goodwill in the market? That's only when that chartered accountant or the firm has a huge amount of recurring revenue. Recurring revenue means that clients are satisfied with the quality of services, with the timeliness of services, with the price point, and also client respects the chartered accountant. So there is a huge amount of goodwill which is attached to that firm or the chartered accountant, and that is recurring fee. So recurring fee is one prime, factor which is seen as a very positive, factor for valuing a CA firm, or for attaching higher value to a CA firm. Now, the other thing is that any revenue means if it is flowing only from one set of clients or only one sector, then there is a very high risk attached to that revenue. If there is, means supposing you are dependent only on certain type of chemical industry, and that particular industry comes under some stress because of the economic scenario, in that case, your revenue will be affected. Supposing you are just dependent on one group for all your for 90% or 80% of your revenue, or you, in fact, if your revenue from one uh, client group exceeds say 25% of your revenue, I would say it's a highly concentrated service. So if something goes wrong with that group, or something goes wrong, some relationship sours between you and that client group, in that case, there will be a big hit to the revenue, and the continuity of the revenue stream can get affected. So it is very important to de-risk, first of all, your practice. And for de-risking the practice, one has to ensure that you look at different sectors, serving different sectors and serving different client groups, so that you are not really dependent just on one, which in fact sometimes when you are just dependent on one or two client groups, they also squeeze you on the fees. But if you are not dependent on a particular group, then your the squeeze on the fee will also be lower, according to me. But of course it all depends on how the market plays out at that time in that field. um this client stickiness is again the same thing as client stickiness is basically your relationships are longer, low attrition, multi-service clients. So that's the same thing which I just talked about. Now, very, very important is that your team capability should be good, which means that you should have, first of all, very strong technical team. Whatever we do, ultimately we are professionals, and our service is the main factor why a client would come to us, or why a group will come to us. And with lower amount of reach out, you will still have many more groups and many more clients will come to you. The reason is because your technical skill is seen if it is seen to be superior, then there will be a lot of word of mouth kind of new client entries, where clients are just referred by others, maybe a lawyer or any other CA who has worked with you, or other groups. That also is a very important thing. You need to have very strong technical base. And for that, it is important that maybe you may be a group of, say, 4 or 5 CAs. You can just divide your, areas amongst yourself based on specialization, and have a very strong specialization for each area, With that, the client satisfaction will be so high that the client only will become your, the people who will get you more business. Supposing from your client place, somebody leaves. It has all, if you must have, everybody must have experiences that if you have a good, client service pattern and somebody leaves from one client place and joins some other group or another company, you will he will refer you work from the other group also, without you would not even know which group it is. Of course, one has to be careful about the type of clients also that you're serving, so that you don't really sign up on something which is not right, which is not morally right. So but I'm just saying that when the technical skill is good, it is strong, your work itself will get you more work, and your practice will grow manyfold. So, technical skill and timely delivery is very, very important for your, value creation. And value doesn't get created in a span of 4 5 years or something. It takes a few years for creating that value, because the assessment about the client stickiness, the growth, all that happens over a period of time. Maybe in the initial period of the practice, the growth may not be much. It's only later on that in 8 10 years, the growth really, the traction really shows up. So team capability is really very important. Then the other thing that I have always noticed is that often, people make a mistake of not investing in people, in resources. They don't invest in team strength. They don't recruit, junior chartered accountants. A senior may not recruit a junior thinking that, okay, I can render this. I'll save on so much, remuneration, which otherwise I would have to pay. But they miss out on this one very important thing, that is the seniors or the groups, the corporates always look at continuity. Because as a person grows older, the adaptability of the person for changes in law, changes in technology goes down. Also, the agility goes down. There can be health issues. So all these are very, very normal things, and there's nothing wrong about that. Um, but then the client feels that, okay, if this person is just serving as a single person and he doesn't have a second line, then I would just, go to that person for advisory. I don't want to, involve him for my bigger picture. So that's how, if you don't have a second line, you are not able to show a second line and a good team strength, then the clients actually then would restrict, coming to you only for certain things. And that is where your revenue takes a hit. So one has to have some, better perspective. And that is where, for building the team also, one needs to do valuation of your own practice. Like, for example, if you feel that it's better to take, junior partners, and you have built practice, a decent level of practice, you would say, okay, fine, I will give that person some share of profit if he's able to, give me some, if that person is willing to give me some, pay me some goodwill based on the valuation of my firm. So this is also a very, very prevalent kind of a practice which is there in the country, and it's fair to the seniors, and it also builds team, and in fact, it helps you grow better. So it's a chicken and the egg situation. If you try to cut on cost and not invest in resources, then the work goes down and you'll never be able to build the team. So team building is very important according to me. Then comes the brand and reputation. So the brand strength of the brand, of course, is based on, the reputation of the firm. And what are the different factors which go into reputation? Quality deliverables, specialized knowledge, then the strength of, then yeah, then the team strength, then what is the morality of the firm, the ethical, the ethos of the firm. Those are very important things for the reputation, um, and the brand strength, and of course the vision of the firm. So If the firm doesn't have the vision, doesn't take on newer areas, you may initially have good audits and you feel, okay, this is good enough. I'm very happy with this much. I don't need to really grow into other areas which are coming up. Somewhere, the firm will not be seen as a growing or a pragmatic firm. So it's important to keep your eyes and ears open, look at what are the developments in the society, in the economy, and also in the regulatory space, and see that, look out for the newer areas. And there are many, many areas which are continuously coming up. It is just for us to, identify them and work on them. So this is something which actually even builds the reputation of the firm. And when you have a reputation, then you also attract more talent. So when you have a reputation of a pragmatic firm, then you even attract more talent. So it's all I would say it's all connected. Nothing is in isolation. Then you have the systems and processes. Again, very important as you grow. Now, if you don't have good systems and you grow, you will never be able to have a standard delivery system. You won't have a standardized level of delivery. Now, if you don't have standard level of delivery, then the it's not the brand, but it's only the individual's talent which sells. In which case, then someday, if there is anything, if anything happens to that individual, the firm's practice also takes a beating. So it's very important to have your systems and processes in place. Secondly, there are many compliances for a chartered accountant, and we really need to ensure that we are not falling short. If for that, we should invest in the systems and processes, and believe me, it's not expensive. When we look at India, there are so many talented people in different other areas. Like, for example, if you want to build basis some, IT setup, you can definitely, carve out some funds and you can invest in that, or you may even go on a subscription model to first, get on boarded with something good, and then as you grow in size, you might then want to go with a system which caters to you, so that the confidentiality of your data is also ensured and it becomes more viable and affordable for your business size. So systems, processes, using IT, those are absolutely very, very important for quality deliverables. Then we have the partner independence, very, very important. So uh, a firm is valued much higher if the firm can continue to survive and grow despite partners going and coming, which shows that there is system, there is client faith, there are, second lines, and there's a proper institutional framework of functioning. In that case, you can say that, the firm will have a much higher valuation. Because it is, even if the partner who's selling out leaves, the firm's business does not get affected. So that's where I was saying that, when I started off, I said that there are several ways in which people go about in expansion. One is to sell out the stake. Now, frankly, I would say that when you are looking at just purchasing someone's, you know, business or CA practice, it's a very dangerous, according to me, it's a very dangerous sphere, because you don't know whether the clients will continue or not continue. You don't know, what is the client expectation, whether you have that similar way of working, your deliverables are aligned with the client's expectation. Otherwise, you will pay a price for acquiring a practice, and in a year's time, maybe you will find that your, whatever value you price you paid based on certain turnover, that has completely depleted to say 20-25% of what you acquired. In that case, you will be you will feel shortchanged, because you will feel that I paid so much price, but ultimately, what have I got? I've got nothing. Where's my payback? I don't have a payback. So really, in case of professional practice, I am always an advocate of not just buying over practices, but not buying over, but more of a collaborative way of working where people come together for everybody's good. And that doesn't really, when everybody has a skin in the game, then you find that everybody works towards a particular level of growth or certain vision. So that's a much better thing to do rather than, value your firm and sell it out. Yeah. Okay. So next we have this, what are the different methods of valuation? I think that's something which interests everyone, that how do you value the firm? So as I said, valuation of a firm is not very different from how you will value any other service. So any other service, if you were to value, how would you go about? You look at the revenue, you'll see the continuity of the clients, you'll see the stickiness of the clients, and based on that, you will make a projection for the revenue and what will be the future cash flows, and then you can do a valuation, which will be a more complicated way of valuing. But a simple way is probably say a revenue multiple. Now, this revenue multiple will be influenced greatly by client concentration. Client concentration is not a great thing because it's a highly risky scenario. So, revenue multiple will be affected by client concentration and sector concentration. So, these two are very critical aspects. Also, if you find that when you go supposing to acquire a stake in a CA firm, and as I said, if there's a senior partner who is hands-on and is driving everything, and the clients come to the firm only for him, then would it make sense for you to pay him a certain price for acquiring his practice? Because you are not acquiring him. He will exit and he will give you that revenue, but the revenue may or may not continue with you. Okay, so you will need to be very careful when it comes to giving a multiple of the revenue. It doesn't really take into account what will be the continuity of that revenue. It doesn't take into account what is the profitability, what will be the cash flows. Then the other thing is that often when you say acquire a practice or you have paid for something, you find that you need to make a lot of changes. There are certain IT related or system related changes which are required for a better quality deliverables. So if you have to do that, you will have to invest in that, right? So if you have to invest in that, you'll have to set aside, certain amount. You might have to invest in the infrastructure, the setup, the way people sit, the way people work, and everything. So when you look at all this, then your revenue multiple would get affected. So effectively, revenue multiple is a very thumb rule kind of a way to go about valuation. That's not really a very in-depth way of valuation. Maybe EBITDA method or a cash flow approach is a much better way to go about valuing the practice. Um, and EBITDA multiple is basically just to find out what is the EBITDA. And in case of service, I'm sure everybody knows, the kind of EBITDA which you earn. But there will be also certain adjustments which might be required. What is uh, going forward, what is a sustainable EBITDA? All those things will have to be done. You'll have to normalize the EBITDA and then apply some multiple based on what do you think will be the growth of the practice, and ultimately what is the payback that you are looking at for the purpose of buying over somebody's practice. Frankly, again, I'm coming back to this, that it is a very risky proposition to buy over a practice because you never know whether the clients will continue, whether there is any understanding between the client and the exiting partner. You don't know. So it's a very, very risky proposition to buy over somebody's practice without having any assurance about the continuity of the revenue for a certain number of years. Um, then as I said that often the senior chartered accountants, they look at valuing the goodwill of the firm, and then they induct junior partners who are interested in taking an equity share. They have good technical skill set, but they don't have client base, they don't have the network, so they would rather pay some goodwill to a senior chartered accountant who wants to induct partners basis, goodwill, after taking goodwill from them and then making them equity partners in the business. So that also requires valuation of goodwill. Typically, when we do valuation or when people value goodwill, it's typically 2 or 3 years of profit. So that's how goodwill is normally valued, and then depending on the share which has been given to the junior or sold to the junior, then the goodwill is debited to the partner and credit goes to the senior who is giving up a share. It all depends on the philosophy of the firm. And some people do take goodwill, some practitioners don't take. Because when you are looking at a long-term horizon and you want to grow, you want to have second line, good second line, and people with good skill set, it might be as much, you might as much require them as they require your network. So it works both ways, and that is why maybe, sometimes, in fact, in some cases, goodwill may not even be charged for taking somebody as a partner. Now you have to look at all the approaches, the cash flow, the EBITDA multiple, your goodwill, everything, and then come to what is the best, value that you can attach to the practice. So it's a hybrid method, and that is something which is acceptable for, any other business also, and that's the method that one can take into account for valuing the firm. So this is again, as I said, when do you value? That is, and what do you value? You value the client relationship, which is attributable to the exiting partner. Now, client relationship attributable to exiting partner is a very dangerous thing because the exiting partner has certain personal relation with the client, and if there is no institutionalized kind of a setup, then the client relationship will also fade out with the exit of the partner. So one has to ensure that there's a proper, hand holding to into the client relationship by the exiting partner, and then only you can actually give some decent value for that business that you get from such long-term clients. Then the goodwill, which is built over years, which is something which one can charge. Then you have the capital contribution. So what happens is that a lot of firms, as I said, you cannot have a firm or a good practice with no investment in it. One has to invest. That old age mindset that you don't really need to invest in the practice is not really something which will go a long way. One has to invest in various things, new technology, people, setup, infrastructure, all these things, licenses, subscriptions. So all these things one has to invest in, and these are not cheap. They will cost something. So when that kind of investment has been made, then it is all fair for the exiting partners to ask the incoming partner to, pay for that also, which is absolutely, reasonable. I would say it's a reasonable ask. Then you have the receivables in the firm. When the firm is getting sold, sorry, just a minute. Yeah. Can you see my screen? Yeah. Can
Yes,
you see
ma'am,
my
it's
screen?
visible.
Yes,
Oh,
visible.
okay. Okay. So you would have billed, but that CA would have billed. There would be a substantial amount of receivable, and that receivable will be received over a period of time, maybe a few months. So just a minute. Okay. You have these receivables, which you will obviously you'll take a price for the receivables also. And that's absolutely fair. But of course, that will be after considering, what is the percentage of receivables which are normally received. Because everybody must have experienced this, that although you raise the invoices, you have yourself paid GST from your pocket for the invoices which are raised, and the clients have taken credit also for that invoices. You still will have certain outstanding from that amount, and the client will never pay. That becomes bad debt. Unfortunately, that's really a big loss because we pay GST out of our pocket and the clients take credit for it and not even pay our invoice, not even the GST portion. So one has to make an assessment of how much is the outstanding receivable and what will be received out of it. And accordingly, something will need to be paid for that because that is for um, the existing practice, because for the future inflows, you will do something like a cash flow model and you will say, okay, this much you're going to receive and this is for the existing setup. So there can be various levers which will have to be considered. Now, of course, the best way to do is to have an independent valuer. What happens is that sometimes, chartered accountants say that we know everything, we'll do it ourselves. But everybody has his own expertise. So maybe the person who's actually selling out or buying may not have this kind of expertise of uh, valuing it in a proper way without double counting. Otherwise, it will go into a lot of heartburns, and then finally, maybe the deal doesn't go through. So, one needs to have an expert to guide you on how to go about this. Next, of course, because as I said, you don't know if the clients which are there with the firm, if you're buying out a firm, if the clients don't continue, then you will be at a loss because you paid that price, but you have not got because next year's revenue from those clients, and that will be, you will be shortchanged. That's why there is a retention clause also. So that's something which will be paid based on milestones reached. It's a very common concept in any service or any business valuation and takeover. There's always a milestone based payment. It is also possible that you might just acquire the firm in a staggered manner. You may say that, okay, initially I'm taking so much percentage in the profit share. You're going to continue to earn so much percentage. That is where they have, the exiting partner or partners have skin in the game. And then you acquire their stake over a period of time. So that's also in a way nothing but a retention kind of a clause, where you have a milestone based payment for the balance stake acquisition. You will have to set a formula for that also so that you know exactly uh, where you're going. Because otherwise, once the business starts growing because of the incoming partner, the exiting partner then says, okay, fine, now my multiple also has to go up, but that doesn't happen because what you're giving him is based on standalone. The growth is because of the rub-off effect of the incoming partner. And so one has to also ideally set a formula for the future exit. And then, of course, one has to have a proper documentation, proper deed to bring out everything. Now, very important is also this non-solicitation clause when you're paying for the partners, that exiting partners goodwill, or you are taking over the firm, then it is very important that that partner doesn't then go out, sets up something else, and then say, okay, I'll go back to my clients and I will pitch for the same work which I used to earlier do. So you have, put so much at stake for that, and then the partner starts, the exiting partner has comes back and gives you a competition and takes away all the work that you have were, aiming to get. So it's very important to have non-compete, non-solicitation clauses in your deed. So this is that the scenario one was about complete buyout, or complete exit, a buyout kind of a scenario. The second scenario is really of collaboration and merger, which is in fact a much better way, which is where firms can come together. You cannot grow in size if you're just acquiring CA firms, because you anyway have to then not just pay for the acquisition, for the delivery of the services. Again, you will have to recruit so many more people at your end. So it is better to go for a collaborative way of consolidation, say a merger or something like that. Our institute also has guideline on how to do CA firm merger and what are the rights of the merging firms. So it's a very elaborate guideline which is there. So and apart other than merger, also one can always do something like just admission of partners and go about, where you actually pool all the strength of two firms, two set of partners, two different geographies, different verticals all together, and that is how you grow. That's a far better formula of growth rather than value the firm and acquire a firm, because acquisition of firm really is not a great proposition for growth. So when we look at merger, again, we have to look at in a similar way only, that, what is the strength, what is the connect in the market where that CA firm is placed. So you have two firms come together with different strengths, different verticals or different geographies. They come together, and that brings a lot of strength on an overall basis to the firm. It also brings, different types of resources. So that's a great thing, and everybody has skin in the game. So while it's while somebody will say, oh, what's the benefit for the merging firm? But the benefit is that, on a standalone basis, that firm cannot grow. The firm would be losing people, the firm would be losing partners, business, because it cannot, bring in that newer level, the higher level of expertise. When two firms pool together their expertise, their technical strength, then it is a much better scene. The existing clients also will stick on. Maybe from the existing client, some people, at least 50%, maybe even thinking of leaving the firm or going to some other firm. The moment the merger happens, they stick. So that's a kind of win-win. And of course, when two firms come together, then with the help of other firm in other, region or other area, there'll be still a lot of cross-selling, where one partner is rendering service in a particular area and something else is required. That area will be brought to the other set of partners who are experts in the other field. So to the extent it is viable, it is permitted, there is a lot of cross-selling which will be possible within the firm, and there will be a great team spirit which will build in the firm to work together. Secondly, again over here, the client quality will have to be evaluated, the diversity. So the points of evaluation of the firm remain the same. But in this, even if you go wrong somewhere in the evaluation a little bit, you have not much to lose. The merging firm, nobody has much to lose. But of course, if the merging firm has certain revenue and based on that certain, the resetting of profits is done and that profit doesn't continue, then in that case, the acquiring firm may feel that this was not a great deal. But then one can always have very, very elaborate, clauses in the deed which can take care of all these eventualities, and we can very well, visualize and draft these types of clauses for our own, like mergers, right? When we do it for client, we can definitely do it for ourselves. Um, Then the thing is, of course, here again, we will look at the people's strength, what kind of policies are there between the firms. Because what happens here, it is not an acquisition, it is a merger. So the other pool continues, the acquiring pool is there, and there will be differences in policies. The policies need to be aligned, which will give that, team spirit to the entire, and the environment will be so nice if there are common policies, common SOPs. Uh, there may be certain variation in cost structures which also need to be aligned. So these are the kinds of things one has to take care in a collaboration or a merger. But it is definitely a great way to go about. Um, Now, most important, when you are when you are listing down things in the deed, and when you are setting or resetting the sharing arrangement between the two different sets of firm is the partners. In that case, you will, because every firm has a different way in which you remunerate people. uh, One has to draw up something which is more aligned. You don't add apples and oranges. And you will, for example, you may have a construct where you will have, say, remuneration paid to the partner, you will have share of profit paid to the partner. There are certain other things also which will be, entitlement of the partners for rendering the services of, for the, rendering of professional duties. That may be true for one firm, that may not be true for the other firm. The other firm has only share of profit. Then when you are comparing the two pools, you cannot just take the share of profit. You will have to also bring in the remuneration, make it share like, or you'll have to bring in the allowances and make them share like, and then you will have to compare the profit so that you can define the rights between the two pools in a more fair way. So this is very important, and I'm sure we very well for ourselves. But keep all this in mind when whenever you are doing a merger. So what are the things which you have to keep ready for, say, a merger or just even a valuation of the firm? So you need to have your profit and loss and balance sheet very clearly with you. You need to have your fee register. You need to have your client list clearly with you. You need to have this as to, who have been your clients, what the fee that you have received over the last few years from those clients, because that is where the incoming pool or the acquiring firm will understand the worth of your business. You need to, and when you have this fee register for a few years, it will also bring out who are live clients, where you had relationships, and the relationship has gone cold. You not built for last maybe 2 years, something. Maybe that's something which could be tapped by, in a consolidated manner. So it is very, very important to have a good client register. You must have a proper system for your billing and client register and your accounts. Then you have the staff structure, which also has to be very clearly listed. So I think, most of the people when they go for empanelment, they do this exercise about the org chart and like how many qualifieds, but that doesn't really go so much into the org chart. It just asks you for the number of qualifieds and others. Whereas for a merger or an acquisition, you need to have a proper org chart which will bring out who who are the partners who are doing what, what's the team size under each vertical, uh, how many years experience do they have, how many years they have been with the firm. So all these things are very important for the evaluation of, how good the firm is. Then you have to also look at what is the service mix. So service mix will obviously look at what is the breakdown, how much is audit, how much is tax, how much is advisory, how much is the newer areas of practice. Why newer areas of practice are very, very important for evaluation? Because everybody, the majority of chartered accountants would stick to the older areas of practice because it's easy, they've learned it. Newer areas is always more struggle because there's a lot of learning, hard work, drawing up SOPs, your technicals on the newer areas. So it's always more difficult. And so people always take a softer option of just going with, what you know best. You just continue to do that. So this service mix with newer areas is a very positive thing to see in a CA firm. And it always, because there's less competition, so you can grow better. Uh, so that's a very important facet, which I think I should have brought out earlier also. Then if you have any, agreements with your qualifieds, your staff, your um, partners about non-solicitation, about non-compete, so all these things also need to be, put in place. They have to be kept in place. Then you have the if you have earned any awards, some recognition, accolades, or something, that also is something that you should keep in play. You should be able to highlight. Then you have the technology stack, which again I had emphasized that you need to have a proper, technology. And now in today's day and age, if you have not geared up for new age technology, you are out of business. 100% you are out of business. If you cannot gear up with new technology and AI, take support from AI, you will not be relevant in a very short time. So with that, you can have so many things to streamline your service areas, your deliverables, the processes. So technology and stack has to be, properly in place. You must have the license versions of everything. Don't get into those pirated things and free and all those kinds of things are absolutely a no-no. It doesn't help because you lose data if there is any somebody hacks into your system. So focus on technology also, and then you need to have your succession plan, because only if you have a clear succession, the incoming firm or the incoming set of partners will be comfortable in maybe paying you or going for a merger. Now, some common mistakes that people, I'll just, is there something? Sorry, somebody wants to say something? Dharmendra ji? Acha, something?
Hello.
Acha, okay, sure. So, so some common mistakes that one makes in valuing a CA firm. One is that, very important is that you have to have your expenses. There should not be any personal expenses debited, because ultimately, if you do that, it's a short-term way of going about, and that will actually kill your value. So it's not a great thing to do. Then, as I said, that there will be certain provisions you might have promised certain people, certain future emoluments. So those things have to be taken into account for adjustment to your profit for a continuing profit, and only then you can do a correct valuation. Then if you don't have engagement letters, there's no documentation, then it is very difficult. It's not a a good way, because if you don't have documented engagements, there's no guarantee about these engagements continuing. So it's better to have more, documented engagements with you. So these are some of the key things which I think you must have with you. And of course, the most important, which I mentioned at the start, most people ignore client concentration risk. It's a very, very risky thing. If somebody has a high concentration on one client, it's a very risky business, because tomorrow if the client goes bad, or if the client decides not to continue with the firm, or the client decides to just go with the exiting partner through, or some referral of the exiting partner, then the firm's business will take a hit. So these, I'm sure, are things which many people must have experienced. So these are very common mistakes that one makes in going by trust and not considering these risks. So these are some of the things, like you drop, if you are looking at, valuing yourself, you drop this 90-day action plan, which is a simple way to go about. That is, what you do is first you clean up, you put up your financials properly, you sanitize it, show the correct profit, the adjustments, about if there's anything about future, that is, if you have to pay somebody higher remuneration in the future, all these things must be well documented. Client register, please sanitize your client register with the service verticals. So many firms may not have a very systematic way of maintaining the uh, billing register, but it is better that from the start you must have a very good classification in your billing register. It helps you even within the firm to understand as to what has gone wrong in which group, what revenue has fallen. You will be able to analyze it in a much better way. You can build a good MIS basis that then you document your org charts, the staff qualifications, and the org chart, so as to, showcase to the incoming team as to what is the strength, what you are giving to the incoming team. And then you will have to do valuation basis. Maybe I would say cash flow is a better way to go about, but with a limited period. It's not, you cannot take a perpetuity in a CA firm valuation, because I would say that service is a very personalized thing. So what you leave behind to the incoming partner is only going to carry the rub-off effect of the exiting partner for, say, next 3, 4 years, max 3 years, 4 years. Beyond that, it is the quality of service which the incoming partners are going to render, which will then decide on the future course. And so one cannot really say that for valuing basis DCF, you will take a full, perpetuity and growth based on perpetuity. That doesn't work. Um, then you have the most important thing is, like, you analyze what are your key strengths, what are the key areas which you are strong on. Draw up what all type of services you are giving, what are the clients under those different services, and definitely that will strike a chord with the incoming team. Now, then you have to also quantify the concentration risk that you've been talking about all this while, and then you have to also have a succession plan in place. If you are selling out, the incoming team has to have that comfort that the service can be continued despite the exiting partners. That's because there's a succession in place. And then you have a professional valuer that you should engage for doing a valuation. And of course, you target a valuation with a 3 year horizon projection, so that you can show what will be the payout, how much will be the price which will have to be paid. Uh, so with this, I would like to end my presentation. I'm sure this would give you insight. This has given you insight about, how you should enhance, how you can enhance the value of your firm, and look at some better strength, or bargaining power for collaboration.
Thank you, ma'am, yeah, for your nice deliberation on subject valuation of firms and collaborations and merger. Certainly, it will be help for it will be helpful and useful for chartered accountant who want to scale their firm with networking through networking. Now I invite Madam Harsh Batra. हर्ष बत्रा जी हैं मैडम.
Yes, sir.
Yes. Now I invite Ma'am Harsh Batra for next subject, the influence of networking and negotiation skill of leadership growth. First, before the starting session, I would like to introduce brief profile of speaker. Chart हर्ष बत्रा जी जो आज आज के कार्यक्रम में हमारे पास उपस्थित हैं, उनका बहुत ही अनुभवी चार्टर्ड अकाउंटेंट है. उनका अपने क्षेत्र में 9 साल से ज्यादा का अनुभव है. एंड शी 9 year experience of risk management, audit, and capital market, strong expertise in auditing, standard financing, reporting, frameworking, and regulatory compliances. Experience in handling complex engagement, technical research, and quality review while balancing practical business consideration. Skill in financial statement analysis, risk assessment, and development of standardization. Process of guidance, proven ability of collaboration with senior stakeholder, lead terms, and deliver high quality outcomes of tight timeless. तो इसके साथ ही आप फाइनेंशियल स्टेटमेंट के इसमें हमें पूर्ण विश्वास है कि आज आपके विचारों से हम सभी बहुत यूजफुल सिद्ध होंगे. थैंक यू. ओवर टू मैडम हर्ष बत्रा जी.
Thank you so much, sir, for the kind introduction, and thank you the committee and the chairman, sir, for giving this opportunity to deliberate on this topic today. Firstly, I would agree to what Drishti ma'am has said in her session. I think she has, along with the valuation aspects, I think she has uh, clearly touched upon the other aspects that we as chartered accountants need to consider in today's era, along with our technical skills and our basically how we need to evolve our thoughts and our practices to become more globally, I would say, relevant in today's again time. So, without wasting much time, I'll move on to the topic, which I need to cover, which is in which we'll broadly talk about two aspects. One is negotiation, and other is networking. So let's firstly start with the negotiation aspects. Let me just move on to the next slide. Yeah. So before we jump on to the on the specific topics, I thought it will be useful for everyone to talk about what is it that as professionals we need to do today, right, to stand out or maybe to differentiate ourselves from others, right, to grow our practice again, which Rushni ma'am has rightly touched upon. One is again, I've tried to bring out three, four aspects here. One is finding your niche, right? So I think today's time it's about it's about having your own expertise. While as CAs we know everything, right? We know we love to acknowledge that we know about taxes, we know about audit, we know about valuation. But I think it's good to acknowledge that people today look out for specific expertise, right? So find your own niche. I think that is very important. What is it that you are expert at, right? So while obviously as we have discussed earlier, it again today's time is to collaborate and building a multidisciplinary or a multifunctional type of setups, but finding your own thing is very important, right? Explore empanelment. Again, I don't think so it will be wiser today to just to rely solely on your self contacts and the people whom you already know in your, particular area, or maybe in your what is it that you're already doing. I think it's about also about, exploring the other options which are available. And I think we must acknowledging that both the government and our institute also is liberating the regulations that way to help us function, in this environment, right? Hence, it's wiser to explore the other empanelment areas. Then, as I mentioned, that we need to now come out of that mindset that we will work alone, or will, conserve the business, everything to ourselves. I think it's a time where we should be, collaborating with other firms who are expert, in the other areas, and through which we can probably offer a combined package of services, to the client. Hence, I think it's going to be a win-win situation, right? Then I think having a growth mindset is very important to, to develop your overall leadership skills, to be a leader that way, right? I don't think so. In today's world, you can be a leader just by, focusing your own profile or strengths. I think it's about having the overall, growth mindset, be it for your firm, be it for yourself, or be it for the, client, or other negotiation that probably you're expecting to do. Last, but it's a very important aspect for in our world, is building the trust, right? I think serious relationships are all about having that, trust relationship with your client. We work in an environment where a client end up sharing a lot of confidential data about themselves, to us. Be it any field, whether you're in valuation, whether you're in tax or audit, we do get a privilege to a lot of their, again, confidential data, and we know little things that probably, the external world would never know, right? In fact, a lot of times we as started accountants know those things which even client doesn't know about their own business themselves, right? But it is important that, we maintain the confidentiality, we follow the, ethical standards with which we are supposed to, comply with. And it's not about following on paper. It's about showing that in your actions, in your daily routine, right? And later on, when we'll discuss about networking and negotiation, we'll talk about, that building the trust, or setting the intention, or right intention, or setting that environment that, that client can, be can leverage on us with their confidential information, while we'll help them in their solution building and everything. I think that plays a very important role in any negotiation, or in any discussion that you're going to have properly with any stakeholder, for that matter, be it with the client, or be it with the other CA firm with whom, you're planning to collaborate with. So let's move on to the next slides. So what is required, to be done before you go for any negotiation, right? So these are the, again, few things that I have noted based on my experience, or on based on the general perception that we have, right? Obviously, there is no right and wrong answer here. There can be many more additional aspects that one can cover here, and I would happy to know the thoughts from the other side as well. So first is research and analysis, right? So whenever you go for any discussion with the client, whether it is going to be for any, project, or whether it is going to be for the existing project, or anything for that matter, it's very important to do your own preparation, right? So it's very important to do that, research. For example, if you're going for a discussion for a client which is probably planning for a IPO in the near future, and till now it is a private limited promoter driven company, right? So it's very important that you understand the client, right? You understand their business, you understand who is behind the business. Now, so a lot of times, when these closed businesses, and you go for any kind of discussion with them, it's very it's very difficult to probably break that glass, right? To actually understand who is behind the name, right? Because generally those businesses are very, they don't come out much. They
तो
they
आप
they, they are not public people. Yeah. Is there a problem?
अच्छा
Okay, I'll just go ahead. So it's very important that we do our research before we go for those discussions. So what I was talking about, that sometimes it's very difficult to know who is behind the business, right? So it's very important, who are the shareholders, who are the promoters, who is that one man or woman who has built this business, because they have a lot of emotions and other they have their own journey, that how they have built this business. And it's very important for you as as their advisor, be it IPO advisor, or you're going for valuation, or for any work for that matter. It's very important who is the person behind, how they have built the business, right? What was their journey. And I must tell you again, based on my experiences, that that client observe this, right? The other party, for that matter, they acknowledge, I've seen that people, gets they're very happy, right? That you have done your research, you know what is our business. So that way, it is helpful, because you're building a you're starting to build a relationship, by knowing about their business, for that matter. Second is choose your goals. Okay, so when I say goals, is that you should know what is it that you're looking for, right? It should not be like completely open ended, that okay, we'll see what will happen. I don't think so. That would be a great approach, actually. I think you probably, again, it is good to have a plan B, because it may not be possible that everything will turn in your favor, right? So you should know this is what you're looking for. This is at least this is the scope of work that you want. This is the minimum piece that you want, right? And you should also know what are your boundaries. Probably sometimes discussion goes into a way that nothing probably is turning out in your favor. Then you should know how to gracefully say no. Or if something is being proposed, which is probably outside your own professional or ethical limits, right? So in that case also, you should know how to set your boundaries, right? So knowing what is it that you want out of that negotiation, what is your plan B, before you get into those discussions, is very important. Make a strategy. Again, it is like, again, preparing for that discussions. Preempt the questions that probably the other side would be asking. It is like, just keeping yourself on the other side of the table, right? And then you kind of think that what is the question again going to come from them, right? If I have to again link it with some case scenario, for example, if you're going to assess the client for some IPO transaction, right? So you should know that probably the other side would have a question on how is it that you're going to help us? How is it you're going to add value? So you should have those responses ready. And again, I always believe that it's very important to highlight that how you're going to create value, while the other aspects are equally important. I think focusing on value creation, in your negotiation and discussion, is very important, and that's where you're going to play. Other is building a team. A lot of times, again, I've seen that, again, both the situations I've seen. One is, the CA comes with the entire team. When I say entire team, the important people who will be able to, break the deal in that case, right? So, if, for example, again, if you're going for some negotiation for an advisory work, which can include multiple aspects. For example, it includes taxation, it includes valuation, it includes business advisory, right? So having a right set of team is very important. So here, again, I would like to highlight, it's very you need to have a long term planning. So it should not be like, okay, it's a first discussion, let's see, what is it that your client is, has to offer, right? And what is it that I can offer? Obviously, initial discussions, you may not be able to preempt everything, and you may not be able to obviously, close all the negotiation parts. But preparation is the key, right? If you're going with a team, at least limited number of people, based on what is it you expect out of that discussion, I think it demonstrates that you have people who can help the client in all the aspects. Again, you demonstrate that you're a person who adopts collaborative approach, which I think in today's time is more acceptable or appreciated approach, right? And it should not be like that you're pitching the client today, or you're pitching for the work today, and then you don't know who is going to be the team, in future, right? Again, probably it may not be possible to have everyone on board, but at least the key people, in having the key people in discussion is very important. Practice and act it out. Again, there's nothing that can replace the uh, multiple attempts to probably doing some mock discussions, right? Again, we had done practically for when we know that we are going for this larger client, and we know that this particular discussion and negotiation is very important for us. We actually do mock discussions within our team. Uh, when we preempt the questions that we are going to have, then having those stressful discussions before actually going on the ground, and asking those questions and asking cross questions, that helps in reducing the stress when you're actually on the ground. So I think that is again one of the pre-prepared things that you should be doing. Include and respect everyone. So again, some part of it I will cover in the later part of the session. So it's very important that we again, as I mentioned, we should know who is going to be there, right? Again, probably to what extent we can pull out that information, we should do. Again, if promoter or CFO is going to be there, so checking in their journey, checking their LinkedIn profile, it helps. And when you are in when you're in those discussions, it's very important to acknowledge the inclusivity, right? Acknowledging that you heard everyone, right? A lot of times in those discussions, there are many people. Like from the client side, you would have people, say, from their finance team. You would have people from their secretarial part. You will also have people from their marketing team as well. So acknowledging that you hear everyone is very important, and giving that equal amount of respect to the others views as well is also an aspect that drives the negotiation. Then last is take care of small things. Again, planning the meeting well, reaching on time, planning the logistics. That also helps in reducing the avoidable stress. There is some stress which cannot be avoided. Like you will have some difficult questions. You will have to, take some difficult decisions also during those discussions. Probably client may not be maybe accepting certain amount of fee, or you need some extra time, right? So all those things will isn't is that is unavoidable, right? You will naturally have that stress in that discussion. But then there is an unavoidable stress, like managing the logistics. Again, if you are there for the discussion on time, and if you're ready for that discussion, again, that helps. One thing probably again I would like to share from my experience is that whenever you're going for those negotiations or discussions, if those are physical discussions and you are there before time, sometimes you can utilize that opportunity to informally speak to the stakeholders. right? You will get to know what are their expectations, what is it that probably may come in the discussion, right? That is very very helpful, because again that will help you to preempt certain questions, before you actually start the discussions. In fact, a lot of times I have done that. I got to know something which probably required some data research. For example, that required me to check that how many, for example, listed clients, or IPO clients, we have done. So, I quickly asked my team, to check on that part, right? And quickly have that data collated, so that in case it is asked to me, then probably I should be ready with the exact numbers and the industry for which, for which the to which client actually, belongs to. So these are the certain aspects I thought it will be helpful to know that what is it that is again required to prepare yourself for the negotiation. Second, again, I one second. There are certain, tactics, we can use whenever, you are in those discussions or negotiations. Building a rapport, again, referring to the part that we discussed earlier, right? Probably reaching before time, right? Knowing the people, in advance, doing your own, research about the people who are behind those financial statements or those reports, right? And there are many ways of doing it. If it is a listed client, go through their annual reports, right? Get access to their financial statements through MCA. It doesn't cost much, right, to download those financial statements, right? Then do your own research on the people that way that you are going to be speaking to. Getting a fair idea about whether they are compliance friendly people, or whether they are process friendly people. Again, there are all sorts of everyone has their own individualistic approach. I've experienced that there are certain people who are very process driven. Right? They would like to move on from point A to, for example, Z in a very sequential manner, and they would not like to break or probably navigate through it differently, right? So knowing that will again help you in building a relationship. Again, you need to do a long-term planning. If, for example, if you know that this is going to be a big, deal for you, right, in future, probably it may not be possible to break down that deal today, but 1 year or 2 years down the line, right, you know that, I can target it. So you need to start it today, right? You need to build that relationship today. It can't be like, I need that client, for example, 1 year or 2 years down the line, because now it is, they have already onboarded other firm, or probably there are rotational, regulations as well, right? So it can't be like I'll think about it in future. Yeah, I have to think about it, today, and then I need to do the planning accordingly, right? So building a relationship again that way is very important. Again, it will help you to preempt the questions that may come from the other side. Ways to convince people. Again, there is no right or wrong answer here. You need to know again what are the expectations from you, right? And then you need to encash on that information to convince the other side. I would like to say in India, people again most likely would want to go for a win-win situation, right? So you need to demonstrate in a way that it's not that you're trying to only convince the other side. You're also trying to, you're also trying to move 2 steps ahead to make this deal happen, right? Again, first, I think you need to demonstrate that you are cooperative, right? You are also not compromising that way, but you're cooperative or collaborative, individual, right? And then again, if you are prepared for the discussion, right, you need to highlight what are the advantages of having you on board, right? What is it that you have on table, to offer, to the other side? It can be experience, it can be the right set of people that you have, it can be that niche knowledge, that you have, that probably, others may not have. So again, depending upon the discussion that you're doing, you need to think of ways of convincing the other side. So in one of the very important aspect of developing the interpersonal skills is asking questions, right? So when you are going for a pitch or a presentation, it should not be one-sided. It should not be like you are only presenting that this is what you can offer. It is very important that when that discussion is going, for example, when the CFO or the promoter is talking about their journey, right? It's very important to pay attention to those discussions, asking the relevant questions, digging deeper, and that demonstrates that you're attentive in the discussions. You're there to add value, right? And also the solutions to the problems that you may figure out in those discussions. So what I'm trying to tell you, sometimes in those discussions, the other party will share their good or bad experiences. They'll probably share about their journey, how they have, built the business, or probably how they have built the practice, for example, from one partner to now 10 partners, right? In that discussion, you also need to figure out that what can be the potential problems, right? And when I say problems, it should not be like, you will highlight that, okay, I see that, okay, this is a structure and this is a problem I can see. You need to probably articulate in a way that you are you preempted that this can be a probably potential showstopper or a roadblock, and this is how we can build it. So I will talk about certain mindset change or shift also that we may require as we develop our practice. And that one of the mindset change that is required is, instead of being a problem finder, we need to be also solution provider as well, right? So that's where you will keep everyone in the discussion engaged, and you will demonstrate your understanding of the business, your understanding of the company, your understanding of the promoters, or probably your understanding of the firm, or partners, in that way. Other important aspect, or probably a tactic, if we have to say that way, is developing or offering concession strategies. When I talk about concession strategies, there are two, again there are two three things. Not Don't always go for a option that, okay, I'll quote 10-20% extra, and then I will bring down, right? That may not always work. So what I would suggest is think of the so you have your data ready, right? If you are offering a certain amount of fee, it should be backed up by some calculation, some efforts, estimation. For example, if you know that this is going to be the number of hours I'm going to spend, this level of expertise will be required to execute that particular project, right? This is what the other expenses that I'm going to incur, and this is going to be my normal markup, right? And then this is the fee that I'm negotiating, and probably then I am applying some more percentages. So have again, you don't need to share that calculation, but that will help you in negotiating better, right? You will be able to demonstrate that it is not just a random figure that I'm quoting, right? It is backed up by certain mathematics as well, right? Secondly, think in a long term manner, right? For example, if you say, if you're going for some discussion where that it can be a recurring business, so probably that there you need to think that I can discount it in a certain way today, and then I can encash it in future. right? So those calculations also, you should be doing, right? While obviously we don't know the future, but if you know that, for example, in audit, right, generally the appointment happens for the period of 5 years, right? In case the appointment is done of a CA firm, right? For a certain set of companies, if you know that this is going to be a 5 year or a 10 year engagement, then again you can do your planning that way. Another aspect is when you know that that particular company is say they're planning to go for an IPO in the future, that also you should factor in in your concession discussions as well. So what I'm going to say that what I'm trying to say is that uh, keep ready your numbers, right? And to what extent you can go, and as relevant for any discussion for that matter, you should know your boundaries. And here also research and analysis again plays a very important role. Figuring out what probably other firms are charging, right? And what are the market trends, what are the industry trends is also very important to build your own concession strategy. Dealing with stress. So we talked about it, earlier. Generally, those discussions sometimes involve, asking difficult questions, a lot of cross questioning. So dealing that with a calm mind is very important. Again, think from the long term objective. Uh, the people who are expert or who are very good in networking, who have very good interpersonal skills, they they smell the desperation from the other side, right? So it's very important that you don't come across as professional, who's desperate, but as a professional who is who is there to add value, but with and serve the client in the best possible manner, but within the ambit of the applicable laws and regulations. So that way, it is very important that you deal with the cross questioning, with the presence of mind. Take a pause, right? When you are in those difficult discussions, sometimes you need to think and respond. So it's very important to be proactive, and we'll talk about it in the later slide. But it is very important to understand that it is not always good to be, reactive. So it is always better to respond than react. So answering those difficult questions is the best way to answer is by responding and not by reacting. One important aspect here is which we talked about in one of the sessions with ICI is that managing the emotions, right? Managing the emotions from both the sides, your own emotions and the emotions from the other side as well. You need to understand that we are dealing with people, right? We are not dealing with robots or machines here, and people do have emotions. You also have emotions, and be similar with the other party. They would also have their emotions. Sometimes when we are trying to articulate a problem which we are there to solve, right? For example, if we know that there is some error in the financial statements that probably we have observed, or something, or some non-compliance is there in you have observed in the annual report of the company. Firstly, obviously, we need to think of a better way of putting it forward, but you never know, right? Sometimes highlighting that or in such discussions can put someone's ego at it can hurt the ego of the people, right? So what I'm trying to say again is that we are dealing with humans, and there would be emotions from both the sides, and it's very important that we deal with those emotions with empathy, right? And today we need to deal with those emotions even with our own team as well. We all are working with probably with Gen Z these days, right? And it's, I think they have also, one good part is that they have made us acknowledge that it may not be, it is not appropriate to be I would say unprofessional while we deal with our own teams as well. So this was one of the aspect. Then other is making things better. So what is it that I'm trying to highlight here is that in every negotiation, it's very important to highlight that what is it that you're going to make better, right? What is it that you have to offer as a professional, right? A lot of times, compliance work is seen as very recurring job, right? Not now nowadays, a lot of clients try to probably argue that there are portals, there are softwares of doing it. What is it that you're going to do, right, to to again value add or to make things better for the other side. So in your negotiation, in your discussions, you should have those pointers that this is what we are going to do, and prepare something extra. For example, if you're going for a discussion for only say one aspect of the business, you should be prepared for some additional things as well. Again, this will help you in in sealing the deal better, right? So these are the important things which I thought to highlight. Let's move on. So broadly, all these four aspects I covered, right? It's important that whenever you are in negotiations or discussions, you listen to the other side, you acknowledge what the other party has to say, asking right questions, deliberating in on those questions is very important. Again, that keeps everyone engaged in the discussion, and that helps everyone in acknowledging that you have come prepared, you're listening to the other party, right? Then understanding the body language. A lot of times maybe through those non-verbal communication, right, you understand what is there in other person's mind, or whether you're going to seal the deal or whether it's going to be a loss, right? So understanding that body language is very important. It will again help you in preparing for your next course of action, right? And then lastly, I just spoke about managing emotions. So these are the few aspects again help you in going through the negotiation process. So the now let's talk about the networking again, which is a very I would say a talked about topic these days, with a lot of reforms happening from the institute perspective as well. Okay. What do you think, networking is about? Is it about only, meeting people? The answer is no, obviously. It's about, building genuine and long-term relationships that open doors to new opportunities. So as I mentioned, earlier that people who are smart, they sense the desperation from the other side. So whenever go for any discussion, any networking event, you should the obviously you should be prepared, and you should know whom to meet, and you should be definitely going out and meeting people. But the idea should not be just about meeting them. You should go for those events prepared, right? How you're going to meet the right set of people, depending upon what you do as a professional, and also how you're going to build on those relationships in future. So probably, for example, if you go for an event and you meet, 10 people, it may not be possible that you will build a long-term relationship with all the 10 people for that matter, right? But at least, target for few, right? And we'll discuss in the later slide that how we are going to, or how we can encash on that, in future. Is what one point that is essential for us as chartered accountants. It's a smaller world, so we don't know who can help you in which ways, in your career, by either approaching you for service, or sending you to someone who needs a service. Again, we all have our own niche, or we all have our own expertise, right? So it's yeah, I think it's not a right mindset that okay, I'm an audit person, so what is it that I'm going to do with a person, who is into taxation, right? So uh, that's not a broad mindset to have. I think the right mindset is to acknowledge that that other person he or she may not be able to help you, or you may not be help them directly, but always an indirect connection happens. Again, I can share some experiences, right? If I know, someone who's very good in, for example, in GST related matters, and if I am the auditor of a particular company, I can refer that person. And if my client gets stuck into, for example, some GST litigation and everything, I can refer that person to my client. And here it's a again it is something that I'm doing beyond my my service area. But then that's what builds the long term relationship with the client, because you genuinely care about them, and you're genuinely referring the right set of people to your client. And that's where things also reciprocate between different firms, CA firms as well. So I'll mostly skip this slide. I think what I just wanted to highlight is that the recent reforms that are happening in or that are being brought up by ICA. I think uh, those again reiterate the importance of having the right negotiation and networking skills. Because if we are going to build global firms, right, which are collaborative and providing services in different part of the world, it's very important that we build the right network so that we can have right set of people on the platform with who collectively can offer the right set of services. So I just wanted to mention that these reforms again highlights the importance of building a network or having right connects in your area. A few myths. It is only for extroverts. I think anyone can network, and we just need to find the right style for ourselves. Right. While some people are good in starting the conversation with some probably informal talks, while some are good in just knowing that this person's do this, and offering their or starting the conversation with some technical aspect which is going to hit the other person, right? So it can be, there is no, again, no right or wrong approach, but definitely it's not only for extroverts. Depending upon whether you are extrovert, introvert, ambivert, you should be networking to build your uh, uh, connect with right set of people. Another myth is that it's about manipulating the other person. Again, you should be doing it in a way that you don't sound desperate, right? You should come across as a professional who is probably expanding their offering of services, who has a right skill to solve a particular problem. So it's about offering again, offering comes at a later stage, but it's about firstly building a genuine relationship, right, and then combining it with the commercial benefits also, while everyone is there to do that. But yes, it is not about that. We are here to manipulate the people. So what are your goals, right? It's very important to identify that, whether it is to advance your career. For example, if you're in job and you're looking for some opportunities in a particular industry, right? So you might go to some ICI event or some other events as well to meet the CFO or the finance persons in that organization. So identifying your goals is very important. Or it can be building your expertise. You may be dealing with, for example, a very niche set of services. For example, something in ESG or BRSR, and you need people who can help you grow your practice in that. And lastly, it can be for genuinely expanding your own network. Okay. So I think these are the aspects which are similar to what we spoke about in terms of negotiation. You should be open. You should be curious. You should be someone who is there to add value, and who is there to build long-term genuine relationships. So it should not just be a transactional exchange. a successful networker, see networking as a long-term strategy, and building long-term and lasting relationships. Again, it's very whenever you're on those in those discussions and negotiations, it's very important that you highlight that how you can add value by sharing your own knowledge in that area, by sharing your certain experiences, right? And then lastly, offering support or offering a solution, probably a small solution or a very open solution for that matter. So these are few types of networking. One is professional networking. Today we are talking about mostly about professional networking only. Then there can be social networking, strategic or personal networking as well. So this, I'll just spend a minute, on this slide, where to find networking opportunities. Again, a lot of people, ask these questions, what is the right platform to do networking, right? Again, there is no right and wrong answer here. Identify what is it that you're looking for, right? Are you looking for expanding your network, or you're looking for forward to collaborate with other chartered accountants, and go and attend various ICI networking events that happen, like WOFA, or probably, recently ICI celebrated the Chartered Accountants Day, sorry, Accounting Standards Day, right? So, consider attending those events, and obviously consider your own expert area as well. Then, if you're looking forward to interact with CFOs, with directors and everyone, then CII, PhD, they also organize, a lot of industry specific events. So go and attend that. Then there are other conferences, events also that keeps happening. So keep following, various websites to keep yourself updated on that. Right. Then there are also local groups as well. Right. There are study groups. Then there are regional groups as well, like NIRC, SIRC. Have their own location specific groups as well. Join those groups. Again, you need to offer what is it that you have, you can do. You can take sessions, you can do some event on, for example, on technology or something, right? To become part of those networks. And then there are a lot of online communities as well, right? For example, there are groups on LinkedIn, and there are other platforms where you can find your networking opportunity. Again, in this slide, I would just like to talk about what is it that you should be doing before you, start your networking journey, probably before you attend an event, right? Connect with people in advance before the event, right? You can post it on LinkedIn that you're attending this XYZ event. It helps, it makes the other people aware that you are going to be there, and you're attending this event, right? So they can connect with you in advance, and they can, and before you attend the event, you already know that whom with whom is you're going to meet. Have pre-arranged meetups, right? When you're attending those those industry conferences or any event for that matter, right? If you have pre-connected with those people, you can arrange some discussions with them in outside or after the event, right? It will give you an opportunity to speak to them in person, and you can link those things with what is happening in the event. And again, whenever you post about something that you are attending these events, you create visibility for yourself, for your firm, right? And then people obviously remember that, okay, I met this person at this particular event. And even if you are not a speaker, you're just there as an attendee, still I think you should be posting that I'm attending this event. If anyone wants to connect, you can do that. uh, all these things helps in creating a brand for yourself, and you probably come across as a professional who is growth oriented. Again, these are some do's and don'ts that I just thought to highlight. Don't stick with the same set of people. Meet different type of people. Don't be like, I will meet only the person who's in taxation. And do not go for only CPRs. Use your time and money carefully. Right. Have genuine conversations. Don't be transactional, or don't be pushy in those discussions. Uh, And do not go only for the objective that you want to have in a client, but also look for collaboration with your existing setup. So have a broad mindset, right? It's very important that whenever you're connecting, you're saving the numbers, right? And you're connecting with the other person on LinkedIn, sending a message after you attended the event. Following up is very important. A lot of times we just go, we exchange the cards, and it ends there. Again, as I mentioned earlier, you may not be able to convert all the 10 contacts into very good contacts, but out of 10, at least convert certain of them into some valuable contacts, and for which you need to invest time and efforts. You probably need to follow up, you need to share the for example, if you're working on something specific, some specific project, you can share that this is what we have recently done, right? You can share some publication that you have worked on. You can share some article that you have worked on. Again, your or if you know about certain updates that has come and that may impact the other person's business or firm as well, right? Sharing all those knowledge, sharing basically would also help in building, is something you should do after the events. So these are the aspects that we have already discussed. While you're at the events, you can while again it is good to carry the business card, but it is also scanning your WhatsApp QR code is also another interesting way of sharing the details. Again, technology is the way these days, right? You can also share your LinkedIn QR code, right? To connect with the other person quickly on the LinkedIn as well. So again, I'll just take a few seconds, to explain this. Whenever you're going for those networking events, keep your, elevator speech ready. They can be different types of elevator speech. They can be 30 seconds, they can be 5 minutes, or they can be even longer. It depends on the time that you will have with someone, right? If you're meeting, for example, a person who's at a very senior position, and you know that you may get only 30 seconds time, for example, when he is in the elevator, or when he or she is just walking inside the auditorium, right? So keep your 30 seconds introduction ready. You should know, you should be just telling briefly that what is it that you do, what is it that you have offer, and again, not getting into the personal stuff. And don't keep the jargons and everything. Keep it very short, brief, and use the right set of words. And practice that speech as many times as you can. If you are actually looking forward to meet someone, for example, you're looking forward to meet, say, ICI chairperson, right? So you should be knowing what is it that you're going to say to 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 the person. This is what I also talked about, that it's not about, the networking doesn't end at the event. It is about, staying connected, right? Without being pushy. I think it's very important, sending a personalized message, within probably, 48 hours, 24 hours, whatever, right, is very important, so that, the other person remembers you. So, again, it may not happen over the night. It will, building relationships and building network takes a lot of efforts. And I think for that, you need to spend that much efforts and time. So again, when you are going for the event, identify three people that you will be, sorry, identify certain set of people that you will be connecting during the event, right? And after that event, identify at least 3 or 5 people that you will be reconnecting, every week. Attend some networking events, right? It should not be like, okay, once in a year. At least once in a month, once in 2 months, you should endeavor to, attend some networking events, right? Keep updating your profile online, and practice your 30 seconds elevator speech. So, I'll just close this by saying that it is networking is beyond some messages and calls, and it is about being collaborative, and hence, if you want to go far, you need to go together. Right. So I would like to end the session from my side here. If there are any questions, I'll be happy to take up.
Thank you, ma'am, for your nice deliberation of subject in detail, about networking and merger. negotiation. It will be very useful. Certainly, it will be very useful for our medium and small firms, chartered accountant who want to scale their firm by networking or negotiation. So it will very useful for that. And now I open to question and answer question open house for question and answer session. Some question are there where I require मैं ये कुछ क्वेश्चंस है मैडम दृष्टि देसाई जी से मैं कुछ उनके क्वेश्चंस हैं उस पर कुछ ओपिनियन चाहूंगा उनकी क्वेश्चन सेशन में पहला क्वेश्चन है व्हाट आर द की ड्राइवर दैट सिग्निफिकेंटली इन्फ्लुएंस वैल्यूएशंस मल्टीपल इन सीए फर्म टुडे
Hmm. Yeah. So as I have already discussed at length in my presentation, that what are the key drivers? The key drivers obviously would be your client concentration, the spread of the client, the reputation of client. So how much recurring work you have, how many verticals, what all different areas of work you have, what are the new areas which are covered by the firm. So all these things are very important for driving the multiple for the firm.
okay ma'am thank you then second question is how should firm apparently value intelligent, intelligible elements such as reputation, long-standing clients relationship, and partners goodwill.
So effectively, when we say that what is the goodwill of the firm or what is the weightage to be given to client relationships, because that is all in a way it is already built into the total value of the firm. And because you already have given a higher multiple because of the reputation, means the clients keep repeatedly to you, and the firm has certain goodwill in the market. The brand of the firm is strong. With the name of the firm itself, there will be a lot of traction in the market. So because of that, the multiple will be higher, and one can say that out of the total value itself, you have to do a carve out the intangibles. Actually, because there is no separate intangible. Of course, then one can always do a goodwill valuation based on the past profits and apply a multiple to that. And depending on the strength of the firm, you will take a 2 years or 3 years, multiple for the goodwill. So that can actually quantify what is a goodwill attached to the firm. But the true value of the brand of the firm will be based on a carve out of the total value of the firm based on the multiple that you will apply to the total business.
Thank you, ma'am. And third one is this: from your experience, what are the most common pitfall firms should con- consciously avoid during valuations, particularly in merger or aggregation discussion?
Firstly, I will say when there is a merger, normally there are no valuation of the firm because it's not a firm buyout. It's only when there's a buyout of the firm that you do a valuation. Okay. But the typical pitfall will be that the clients go away. If the practice is bought over, after that, supposing the clients do not stay back, in that case, it's better to have certain retention and you pay certain amount based on a staggered manner, depending on what is the revenue flow from the client relationships in the future. So the typical pitfall is that you pay a price and the client relationship either wanes or it doesn't grow as expected. So that is a typical pitfall. Secondly, of course, you if you have not taken into account the risk of concentration, that is also something which, supposing you are heavily dependent on a particular industry and something happens
Yeah,
to that industry only, you
yes,
paid a price and you feel, oh my God, now how am I going to recover this money because everything has changed. Say technology has changed or the businesses have completely got destroyed. Then so you will need to have these things in mind when you do a valuation. You go discount is a multiple. You will have to discount the multiple if you have a huge client risk, client concentration, or sector concentration.
thank you, ma'am. And another one is how can partners effectively address situation where there is a significant gap in valuation expectations between mergers firms.
Okay. So, of course, then the best way to go about in case of significant gap in the expectation, if you want to anyhow have it, is to then have some performance based. So you don't do a complete buyout. You do more on in a staggered manner. Supposing you have to do a buyout, then you do in a staggered manner, and you give the the balance amount based on performance. So nobody is at a loss, and and you are able to do a buyout at the price which they want to receive. Otherwise, of course, if it is too high, then why would you want to go for it? It's as simple as that. Then you would rather go, if it is not viable, then you would rather go in an organic way than to do a buyout.
Okay. How should valuations accounts for dependency on key partners, on markers, especially in mid-sized firms?
Yeah. So if those partners are going to come along, that those people who are the critical people partners for getting business, and they have a huge reputation in the market, and if those partners are going to come along, then of course then the firm will have you'll have to pay that premium for getting those partners
As a
also.
goodwill,
But
man.
then if sorry, can you
As a
hear me?
goodwill of key partner.
Uh, you will have to pay them, yeah, goodwill for for their personal goodwill. But if they are going to come in as partners, so you pay them goodwill plus pay them share of profit, the math doesn't really work like
Yes.
that. If they come in and they are going to get a share in a bigger pie, then one can do something different, which will give them an upside and also have them continuing in the business. Because if they are key partners, you want them to continue. If they go away, the acquirer is at a loss. So acquiring a partner by paying a high goodwill and then giving also a share of profit will be little bit of a challenge for
If
the
it,
acquirer. So you
yes,
have
yes,
to balance out both the things.
yes,
Goodwill plus share of profit in a way that the incoming partner feels that there is a better picture for him.
yes. And another one is in aggregations scenario. Is it advisable to standardize valuations methodology upfront, or should it be approach on a case to case basis?
Correct. It has to go on a case to case
Case
basis.
to
It
case
cannot be
basis.
a general, no, it cannot be a general formula.
It cannot be. Always evaluation is should be done on the case to case basis.
Yes.
Okay.
Even the
From a
multiples are not standardized.
okay. From a strategic standpoint, how should a firm decide whether to merge, affiliate, or remain independent based on valuations outcomes?
Yeah. So, well, remain independent or so actually that is for the it all depends if the partners of the selling firm, they feel that the goodwill which is offered to them is not that significant or attractive, then they may decide that we probably would just remain an affiliate firm, and we would want to work, get the benefit also of coming together, but not really come together. We would like to have our options open. That
Thank
is,
you,
we
ma'am.
can continue to earn our profit like that.
Thank you, ma'am. There are some question also is also for Harsh Batraji, and I would like to get some opinion on these questions. First is, how can one effectively negotiate a situation involving a power imbalance such a between a large and a smaller firm?
Okay, that's a good question, Dhanuji. So one is that it's important to not to get intimidated, right? While the other party who may be, for example, a larger firm, right? they may, they may have a larger setup, more, more people in that way. But it is important to not to get, too much, intimidated. I think what I discussed earlier is very important here. That whenever you go for any discussion, be prepared, right? So preparation is the key. Doing your research, understanding the company, understanding your own strengths, doing that SWOT analysis, strength, weaknesses. So I think that's important, right? So be prepared that of the fact that what are your strengths, what is it that you can offer. While it may, or the intention should not be to to highlight that the other person can't do this, but the intention or the objective should be to highlight that this is what I can do, this is what I have on the table to offer to you. I think one area where the smaller or the mid-sized setups can very play a very important role is being approachable, like, right? So a lot of times CAs if you're part of a smaller setup, right, then that means there are limited number of people. Okay, so
Yes.
in that case, you can offer to the client that I'll be the one who will be always approachable, right? While again, nothing against anyone, but probably in the larger firm setups, there are multiple levels, right? And if there is a senior person, then we are not very sure how approachable they would be, right? So what you can probably offer on the table is that probably I'm a call away, right? I'm that person with whom you can approach at any point of time, right? So you don't need to go through those levels. Then you speak to manager, first you speak to the other person on the engagement, then it will go to the partner, right? So this is something you can offer on the table. And you can also probably encash that there while the process is good, right, but sometimes having multiple steps in process also slows down the execution, right? So you can offer that, you can also offer that on table, that since there are lesser layers of approval, there is a quick decision making that you can offer, right? And then offer your niche experience, offer your the knowledge that you have gained over past so many years that you have worked. So that's
Yes.
that's that's a point,
Yes.
Dharmendra ji, that you can put it on
Yes.
table. Yeah.
Right. Right. That's thank you, ma'am. Then another is beyond commercial terms. What practical approaches can help in negotiation aspects such as governance, decision making, and clients' ownership?
Yeah, I think it's again a good point to deliberate upon. One should not always play on the money. I think that again that may not be the best way to do. I As I again mentioned earlier and during the session, that focus on relationship building. Okay, both relationship building, and management. So beyond the commercial aspects, offer a long term relationship to the client, right? Offer that you are there to build trust. And again, trust is something again very important in our set of offerings, right? So this is also a non commercial but a very important factor that you should put it on table, right? You should also focus on risk management, because we are living in an environment, or in an economy which is very uncertain, as of now, with wars, and with so much of global and geopolitical tensions happening across the world. You should offer risk mitigation, right? You should preempt the risk that client may face in future. For example, it can be imposition of heavy duties, it can be having more stricter regulations. So you should talk about those risks and how you can offer to mitigate those risks. Again, another important factor that I mentioned in my discussion on networking is that value, position yourself as a value creator, right? So that psychological positioning is very important. Yeah.
Yes. Right. What mindset shifts are essential for CA to evolve from technical expert into effective negotiations and influencers?
Yeah, I think I talked about some of them during the session. So
Hmm.
one is shifting from knowledge to narrative. These days people love to hear narratives, right? You hear any promoter talking about their business with the kind of emotions and probably the happiness with which they explain their journey, that I started this business with probably one machine, and now I have a whole factory set up, starting with 5 workers. Now I have 5,000
I thought,
employees.
yes,
Right, so the kind of probably connection and with emotions with they with with which they explain their journey. I think that's where we also require as chartered accountants, right? So building a narrative is very important, again in the right spirit, right? So that others, when you're going for those discussions, you can people other people can relate to it. They can appreciate your journey, and it is very relevant for both the aspects, Dharmendra ji. First is explaining yourself, your journey is in a narrative manner, that how you have become probably a CA with so many years of experience, and similarly sharing your experience also in a narrative way, saying that okay, I have knowledge of India's and I have knowledge of FEMA regulations. Again, people might not be able to appreciate that much, but giving this saying this with the help of an example, that I helped a large organization transitioning from the erstwhile accounting standards to India's, or saying that I supported my client in again getting listed successfully on a stock exchange, and I collaborated with multiple stakeholders to help the client to navigate through that journey. Again, it makes a difference. So
yes,
building that narrative is very important. Another aspect that I already talked about is instead of being a problem finder, also be a solution provider. I think that mindset change will also play an important role in the long term journey. Lastly, I think again this also I spoke about change from being reactive to proactive, right? During those heated discussions and stressful discussions, instead of being reactive, firstly we should respond, and then being proactive is very important. Preempting the issues, understanding your client business, or uske basis pe identify karna that what is it that probably can be a risk or can be a problem for your client or for your firm in the future, is very important. That's called as being proactive. I think
right.
that is another outcome, another mindset change that helps.
Okay, मैम, थैंक यू, बहुत अच्छे से बताया आपने. और नेक्स्ट वन इज, हाउ शुड वन हैंडल नेगोशिएशन वेयर द अदर पार्टी इज नॉट फुल्ली ट्रांसपेरेंट or is deliberately delaying decisions? What can we do in that case?
I think firstly, I would like to start by saying that in our profession, transparency is very important, because if we don't know the complete picture, we may not be able to find the best possible solution. Again, under the ambit of applicable laws and regulation. But if as a CA, you are facing those issues. Firstly, it is important to ask the targeted questions, asking the specific questions instead of asking the open-ended questions. If you're thinking, if you're feeling that other party is not giving the complete responses, then probably you need to change the set of questioning. You need to change your set of questions from being open-ended questions to specific targeted questions. And understanding the body language, understanding the non-verbal communication is also important. And this also I spoke about earlier, that this will help you in identifying whether the other party is trying to delay the decision. And identifying reasons is also important. Again, not don't try to be desperate, don't try to be pushy. If through your sources and through your connects, it is possible that to find out that why the other party will help you in offering a better solution. But at the end of the day, it is very important to set your own boundaries. If you feel that this is not doable within your within your set of
Requirement.
principles and requirements, then be prepared to calmly and professionally step down also. If you think that
Yeah.
you're not getting complete information, I think it is also important to to say no as well.
Right, right. Thank you. In your experience, what differentiate firm that successfully convert networking efforts into tangible outcomes from those that do not?
I think again, when I displayed the last slide, I spoke about it, that it is about again building a genuine and long term relationships. Following up with the right set of people. It's not about that you again went to an event, you just exchange the cards, right? Sending a message, connecting on right platforms like LinkedIn, increasing the frequency of attending those networking events, meeting the same set of people in multiple events helps in identifying, well, the other person realizes that you are active, and you are you are here to build again genuine connections, right? So I think your networking fails because sometimes you're only focusing being social, not being on strategic about your networking, right? So I think that's where that's where it differentiates. Again, preparing yourself for the events, preparing your 30 seconds elevator speech, knowing about your firm, knowing about what expertise that you have in place, knowing about the other person's requirement, right? And then picking up those requirement in your discussion, that helps in or that is something, that differentiation a good networking with the one that doesn't work.
Thank you, ma'am. Thank you. So nice. Now I invite Mrs. Sanjay Kumar Agarwal is there. Ma'am, hello.
Hello. Am I audible to you, sir?
Yes, yes. Is
Yeah,
Sanjay ji hai available?
sir. Sir is quite busy with some meetings.
Okay, so then I will give vote of thanks also.
Okay, sir. On behalf of Aggregation of CA Firms Committee of ICI, I extend my sincere thanks to our respected chair, to our esteemed speakers and our moderator for so ably steering the session today and facilitating the meaningful discussion on this webinar on Scale Your CA Firm Valuation, Strategic Networking and Negotiation for Sustainable Growth. It is heartening to know that more than 960 members were enriched today through this session, reflecting the relevance and impact of the discussion today. I also express my gratitude towards all the participants and our technical team for their seamless coordination. With this, we conclude today's session, and thank you so much to
Thank you,
all
ma'am.
the participants, to our speakers, and to the moderator, sir. Thank you all.
Thank you, ma'am.
Thank you
Thank you.
everyone.
Thank you.